exciting.
Just we went every place to get him off the way.
All right. Good morning, everyone. I'm going to kick it off here. All right. S&P 500 last night pulled back a little bit. We had about a third of a percent correction. I managed first time in 3 sessions that we've had a decline, but we've kind of been struggling as we get up to sort of that 1805 to 1808 level on the S&P. We did get that record close, I believe, in the previous session, but it wasn't a close on highs, so we were kind of trading up around where we've been intraday several times, and it feels to me like we're just kind of sputtering out there at the moment. We did get the budget deal out of that was presented, and looks like it could be a pass through Congress here pretty soon, which is going to set spending levels for the next 2 years and prevent future government shutdowns. I think it definitely, from what I understand, what I've read, it looks like there's some agreement from both sides. Speaker Boehner is backing it. Obama says it's a good first step, so it looks like to me that that's going to get passed. I think it's going to be a positive going forward for markets, or at least it's at least some risk that's kind of out of the way. We did get hit pretty hard overnight in Asia with Nikkei that rallied back a little bit. It was down close to 1.5% early on, only closed down closer to 0.5%, but China got hit pretty hard. A bit of pressure on banks. Investors awaiting updates from the government's annual CEW conference. And then obviously a little bit of strength at the yen, a little bit, very minor, but just I think following down, taking a little bit of profit, in the Asia session. There's no corporate action out today, and market data a bit light as well. We had machine orders in Japan, which were better than expected. We had domestic CGPI numbers year on year that were in line. We've got the German CPI numbers on the open. We've got local CPI numbers at 10 o'clock. Then we've got local retail sales, excuse me, at 1 o'clock. And then we've got mortgage apps at 2 o'clock. So keep an eye out for that. All right. The first thing that I'm going to get into this morning is really going to be the thing that's kind of been a question. I've been away for 4 or 5 days, but just kind of keeping a broad eye on the market over the past few sessions. And what really has me kind of baffled is the first chart that I'm going to show you, which is really the Treasury market for the first, the U.S. Treasury market for the last few sessions. Sorry. What we've seen. Why is that not popping up? There we go. Okay. An error occurred. What the hell does that mean? Here we go. Okay, there we go. So we've got the 10-year Treasury. What's interesting to me is the last couple days' action. I mean, this chart is kind of a mute point here on the 1 year. I mean, we're coming down at least to test some sort of support on the trend line, if not even kind of dropping out the bottom a little bit. And you can see we've really just been creeping back up. We're looking at the yield here on the 10-year Treasury. And what's so interesting to me is we had awesome non-farm payroll numbers and ADP numbers last week. And you can see there really on Friday's session is the first fail. We really went hard and then we kind of failed. And now the last few days, yields have been coming down in the States. And it doesn't make any sense to me. Obviously you've seen the gold price that's gone up. You've seen a lot of the other commodities that have started to spike. We got oil running again, it's close to 100 on light sweet. We've got copper at the highs of several months now, I believe. Gold was just had a nice $35, $40 bounce, and I can't figure out why that's happening. So that has me a little bit concerned. You would think that they'd be pricing in tapering. What this is telling me in my mind is that we're not going to get a taper, obviously, in December, and what they're maybe even pushing expectations out somehow. I don't understand how that could be after that kind of data, but this is something that I think we must follow really, really closely. I think it's been one of the reasons why the markets have done a little bit of what they've done over the past few days and certain parts of it. So just keep an eye on the U.S. 10-year. Obviously, on the back of that, that's going to obviously move the local bond market as well. We're down to about 8.24 on the same yield, on the same 10-year. We were up to around 8.50, and that's when we were up at 8.50, that's when the rand was the weakest. That's when I think the most pressure was being applied to the retailers, etc. So just keep that on your radar. All right, Standard Bank. This is a chart we've shown 55 times over the last little while. I just want to show it one more time. Go back, show the significance of the 120. The reason why I wanted to show it again here is really because we kind of popped up a day or two ago out of the top end of this flag. This is the most perfect flag formation on just multi-year support. So this is one of the better, in my mind, it's one of the better setups we'll get ever. In terms of just straightforward kind of breakout. Then we come back. We always make that first test before we really make our real run. And this is it to me. So we had yesterday, we also pulled back to support here, managed to close above it. And I think down here buying around 21.50, or 21, anywhere you can get kind of around that level, to me, it's a bit of a screaming buy. I'm just over the weekend kind of thinking about it. I think I'm going to start adding to the position that I do have here. I think you got to own this one. I think it's been held down a little bit by what we've seen on the local bond market here, as well as what we've seen from some of the other sectors, the retailers and things like that have been on pressure, all the interest rate sensitive stocks. All right, Sasol coming back down. This has also been a level that we've shown several times, but we're getting back down to test this level again. The level's at 494. It's very clearly defined in my mind, and you can really see we broke out. We made this nice breakout here. We came down and tested it 1, 2, 3, 4, 5, 7 or 8 times. 494 is definitely a significant level. If it drops us, it drops us, but I think it's definitely worth a nibble on or around these levels if you can get it over the next session or two. All right, Life Healthcare. We'll have a quick look here on a 2-year. And this is the same. We've got a lot of these patterns in our market right now. Old Mutual, Standard Bank, Sunlum, they all come to mind here. Kind of broke out at around $39. We're making a nice little flag formation off of that breakout. And to me, I like this thing, especially if we can pop out to the upside, grabbing it around, anywhere between maybe this 38 to 39 level. To me is definitely an opportunity to maybe buy on what's a high likelihood setup. So watch this Life Healthcare. If we get it around those levels, I think it could find some nice support. All right. What some of the most disappointing stocks on the index have been is the retailers and any of the interest rate sensitive stocks, particularly things like Growth Point. You can see here, we're looking at a 2-year chart on Growth Point. You can see we're coming down basically to retest what were the lows back in August. That was the last time when yields went crazy on the U.S. bond market, so I don't think this is any coincidence. We bottomed out at around 22.90. But if we back out a little bit here, go all the way to a 5-year, you can see how significant these sort of levels are. I'd actually even throw this level a little bit higher, maybe, to kind of encapsulate round off some of the bottoms here, and that puts us down to around call it 23.50, 23.40, 23.50, which is more or less where we closed yesterday. So I think this is really important. This could be an area that's worthwhile taking some risk. I think that obviously the last level of support really is here around the previous close down here around 22.90. If we drop out the bottom of that, then I really think that things could get ugly here for Growth Point. But like I said, these things are going to move in tandem most likely with a lot of the retailers. The retailers have been getting absolutely punished. ShopRite, another one of those, coming down, potentially testing what some of the recent lows were down here around 159. I think just looking for any sort of semblance of support, you can maybe go back on a 5-year and try to draw some sort of trend line support, which would come in close to around now. I don't really like that. I don't really think it holds much water technically. However, it is something you can hold on to if you already got a long here. Bottom line is this thing drops below 150. 159. What's the closing low here? Looks like 158 actually. If we drop below 158 on ShopRite, then I think you're really in danger territory. Other than that, it is quite interesting because they're starting to really separate themselves from the likes of the SPARs. SPARs trading up close to highs. Woolies is also rallying quite nicely, getting back up close to highs here. Pick and Pay up nicely, trading at multi-year highs, I believe. And in fact, Pick and Pay is actually broken out. I didn't see this. I didn't go back to 5-year earlier when I looked at this, but Pick and Pay as of yesterday is actually broken out above 50. So, especially for you guys that are short Pick and Pay, be careful of this one. But bottom line is ShopRite's really underperforming. You can see, what this is doing relative to its peers. It's a hell of a long ways off of its highs, and probably not a bad nibble on support. It might not be a bad pair as well. That's it for today, guys. Thanks a lot.